Yes, that's right. Markets are stretched to the downside because we lost, almost 13 percentage points in 2 trading days. As you know, it's almost like the stock market and the economy was delivered a heart attack from the terms of those tariffs.
So here's a sneak peek into what happened and why it matters. Tom Lee from Fundstrat came on CNBC after the so-called Tariff Liberation Day, when the US dropped huge tariffs unexpectedly. The US tariffs were way harsher than people expected, and the market reacted like it had a heart attack. According to Thomas Lee, dropping about 13% in just 2 days. Lee admitted that they were blindsided. Not only were the tariffs confusing, but they also broke a kind of unspoken rule in capitalism. Business needs predictability. A lot of companies already restructured their supply chains after the last trade war with China, and now those investments are suddenly at risk again. This has a tendency to shatter trust, and trust is everything in the markets. But here's the twist. Despite the panic, Lee says we may be seeing the return of something called the Trump put, meaning the government may step in or ease off when the market gets hit too hard. There were already signs of this. The Nasdaq bounced and a rumor of a tariff pause caused a massive snapback rally. Now the question is, what does this mean for crypto? Especially when policies feel erratic or politically driven, investors then often look for assets that are outside the system, and that's where Bitcoin comes in. Bitcoin isn't tied to one government's policy. It's decentralized, borderless, and deflationary. So in a weird way, economic chaos, broken trust, and erratic policy can actually strengthen the long-term case for crypto. It becomes a hedge against uncertainty. That doesn't mean crypto won't be volatile too. It will, but when trust in traditional systems break down, people start looking for. That's why macro moves like these tariffs do affect the crypto world more than people realize. Alright, now that we've laid the groundwork, let's hear directly from Thomas Lee himself.
I think that there is a bounce underway. Mark Newton, our head of technical strategy, views this as a technical rally. I think something that can take us, to recover towards 5,500 or something like that. But I do think that there is, the challenge is going to be, we don't have a fundamental clarity and sort of the all clear enough for us to say that that's going to push us back towards new highs. So I do think we're kind of stuck in the near term, but yeah, I think markets overreacted to the downside. And yesterday, it does look like the messaging has switched. The president has moved towards to letting people know they're negotiating. And I think that's a return or a quiet return of the Trump put, because I don't think they want markets to continue to have this heart attack. One of the things, we spent a lot of time talking to investors between Wednesday, Liberation Day, and over the weekend. And, it's clear to us investors feel that not only were these tariff levels absurd in the sense that it was very difficult for people to understand the calculation, but it really did break a covenant with capitalism. The idea that businesses need stable and predictable regulations. Many companies moved their supply chains in 2018 because of the need to move away from China. And now they have, potentially trillions of dollars of stranded capital again because of these tariffs. So I think that's the seismic shock that's very tough for markets and the trust that's been broken. It doesn't mean that we can't see a level of clarity that helps restore that trust. And so markets, after this waterfall decline, one scenario is a V-shaped bounce that takes us back to the previous levels. But the reality is it's going to, I don't know what that sort of clarity that's required for that is. So I think it does feel like this will take some time. And one very good friend of mine is Tom DeMark, and he says this reminds him of 2011. I think that's not a bad way to look at it, that it's going to take a little time for markets to regain some trust.